For over a century, Absa has been on a journey, one of impact, transformation, and empowerment. A journey deeply rooted in the stories of the people who inspire us every day. Entrepreneurship is the lifeblood of Kenya's economy. Absa is not only supporting today's businesses, but paving the way for the future by providing access to financing, mentorship, and training.
The role of Absa plays for me is advice, giving me capital, and give me the direction. The rest of the ladies wafungue account kwa Absa. Inasaidia wa mama, kusema ukweli inasaidia.
V4D, this is a regional program that is commissioned by the German government and implemented by GIZ. The program is also funded by European Union and Norway government. The SIHA Empowered project in partnership with Absa led to the employment of 1,000 people, out of whom 85% were women. The partnership with Absa Kenya Foundation will focus on incubation and acceleration of women enterprises to ensure that they easily access markets and finance.
In the coming years, we aim to support 50,000 MSMEs with a focus on women, youth, and people living with disabilities, driving sustainable economic growth. Through education and skills development, we've empowered thousands, investing in digital literacy and skills, providing scholarships, and building foundations for a brighter tomorrow. But this is just the beginning.
These computers are going to boost the enrollment of the school, because many parents want schools where computer is taught. After Form 4, our girls will be able to fit very well outside there.
I never had to deal with the last-minute struggle about rushing, clearing my fee balance, not sitting for examination because I have fee balances. I would like to thank Absa so much for this opportunity. The same way they stepped in my life and changed it, same way I do also one day want to just touch someone's life.
When I was contacted to apply this scholarship, I was really happy and hopeful that finally I'd get a way out financially.
It is beyond scholarship. Absa have given me a study laptop. They have given me upkeep money enough to support me at school and also support my grandmother. Now she's comfortable. Absa, you have wiped tears out of the face of a boy from an interior village. A boy who could not imagine of getting out of a madhouse with his grandmother. Thank you, Absa.
Last month, my teammate and I, Abigail Wamboi, had the opportunity to participate at Absa Kenya's Girl Code Hackathon, and we created a solution called Tunza Malkia, which catered for sexual reproductive health for Kenyan women. We're currently still building Tunza Malkia to move it from a concept to an impact and an income opportunity platform for ourselves and other young women.
Our vision is to empower 750,000 youth in the next 5 years through education and skills that will align them with the needs of tomorrow's industries. Looking ahead, our commitment to sustainable practices remains firm. By working together with communities, we're protecting our natural resources and helping Kenya transition to a low-carbon, climate-resilient future.
Public resources are normally a problem with what we call the tragedy of the commons. Anything that is commonly owned is never very well looked after. And I think Absa has done so well in fighting the tragedy of the commons by being a good champion for the protection and conservation of our forests. I hope that touches on to many others and even their customers.
As we write the next chapter of this story, we will catalyze action across Kenya, conserving our planet for generations to come. In times of need, we've been there, working hand in hand with our colleagues and partners, providing humanitarian relief and building resilient communities.
So as a long-time partner with Absa, Brighter Monday is excited to see the foundation extend its reach. Their commitment to empowering the youth through the Ready to Work program with future skills is transforming Kenya's education landscape. We believe the next generation is in good hands.
Early this year, we launched together with Absa and the Nakuru County government our area program in Salga, digging a borehole which was funded by Nakuru County government.
Initially, they were walking 5 to 7 kilometers to access water, and when they accessed this water, it was not clean water.
So it was important to partner with those institutions that also believe in the sustainability of communities, and Absa is one such partner.
At the peak of the COVID-19 pandemic, on very short notice, Absa came through with food assistance for over 6,000 people. The food assistance reached over 400 students from 9 schools in Laikipia County and hundreds of families in Kajiado County and many more in the urban slums of Nairobi County. We are looking forward to what the future holds as they continue to deepen their impact in the communities we serve together.
Hata walemavu ni watu wanaweza kufanya kazi na kuishi wakijitegemea na kuwa na familia zao.
Kwanza nashukuru kwa sababu itafanya ule mtoto ambaye ameregeshwa nyumbani kidogo atarudi shule kupitia Absa. Asante Absa.
Our story of impact did not start yesterday. For over a century, we've touched millions of lives. And now, our focus is on the future.
At Absa Kenya, we believe in the transformative power of growth stories, stories of growth for individuals, communities, and enterprises. The Absa Kenya Foundation represents our commitment to supporting such growth stories. And the launch of the Absa Kenya Foundation starts a journey that continues to present Absa as a force for good in the communities. Because in Absa, your story matters.
As Absa, we are proud to be associated with each and every one of you who is represented here.
This is our newest and most elegant branch in the country today because it looks different, feels different, and it's because as our customers, you deserve it.
We have grown together, and I appreciate the bank so much for the success, and we celebrate with you, even opening this new branch.
It just brings to life our brand promise, which says, your story matters. These are all the stories that matter.
Sustainability is not something we do as a marketing story. It's something that is intrinsic to our business. The answer lies in partnership and everybody rowing at the same time. We've won awards in this space, and it's something that we truly believe in. But as we look forward, there is a lot more to be done. As an organization, we are ready to partner with all our stakeholders to take this to that next phase And I really look forward to working with all of you as we take that next phase of the journey.
This report has the right governance, the right oversight, the different committees that we have been able to take through our commitments with the right oversight with the board to make sure that we are sticking to that and really looking at three themes. Issues to do with the risks, issues to do with opportunities, and the long-term value that we are putting as part of our sustainability journey.
It's not just a report, it's a reiteration of our commitment to sustainability and all the actions that need to be taken. We must not lose sight of the fact that the true measure of our success in the implementation of the strategy that we have got and those commitments is on the impact it has had and the lives that it has touched.
The responsibility I bear is to try and make this organization the best place to work and the best place for talent to achieve their career aspirations. We have matrices that we track under our people strategy, starting from gender parity, same pay for same work, to make sure that no one is biased against any of the genders. How do we make our organization a place where people with disabilities can as well feel welcome and we can offer them challenging careers? So we have not arrived, but we are making very good progress in that space.
By bringing to market the first to market Absa Eco Home Loan, which is at 110% loan to value. We're going to be offering solarization or solar power systems, water efficiency embedded into it, again through partnerships. And then lastly is waste management, biodigesters or other similar equipments that allow waste management in our homes, reduce environmental pollution, and break down organic waste and advance the entire agenda of environmental sustainability.
Absa is not just a financial institution. You have positioned yourself as a development actor, a partner alongside the United Nations, one that is waving social equity, economic inclusion, and environmental sustainability in the very DNA of your operations. Whether through climate-smart agriculture, support for care economy models, or gender-responsive procurement, Absa is embracing a shared value model, doing well by doing good, or shared value. And the UN and UN Women is proud to partner with you. I would like to commend Absa's leadership for the consistency, the transparency, and accountability reflected in this third annual sustainability report.
and also importantly that we may take feedback from you on how we can run our business better. I'd like to welcome our online audience. We are broadcasting this session live on Facebook, on LinkedIn, and on YouTube. And so I like to say for all live productions, please be aware that the world is looking at you. Cameras are going around. Do only that which you'd like to be seen doing publicly. Lastly, to say thank you very much for honoring us with your presence this morning. When I left my house at about 6:30, I noticed it was pitch darkness. It was very dark, and Yusuf, my boss, since you live around here, I know that's when your alarm was going off. But glad to see that all of you braved the cold morning, the chilly morning to be with us today. And for those joining us online, happy to have you. We welcome you to engage with us throughout the session via comments. Let us know if you've got any questions, and our teams will be on hand to respond to any of you. I think before I welcome Abdi, I'll just like to give you a sense of how you'll run the day. As usual, we'll start off with Abdi. We'll give you a highlight, an update on the journey that we are on from a strategy perspective. We will then hand over to Yusuf to give you highlights of our financial performance. Abdi will then come again to recap and give you a sense of what we are looking to as we look into the months ahead. And then we will have a segment to engage with yourselves in a question and answer format. And we look forward to that session. It's important to us just as it is to you. Having said that, I'd like to introduce the leadership of Absa that is in the room, so that when Abdi comes on stage, he can just go ahead, and run with the session. So I'll ask the members of our leadership to kindly stand up, indulge me, except Yusuf and Abdi, who will be playing a role here on stage, and I can do a quick introduction. We've got Sophia, who's our Treasury Director. Then there's a gentleman who's joined us. He can remain standing. Yeah, that's Julius Kamau. Julius Kamau is our Chief Operating and Digital Officer. All right, now that you know the members of our leadership that's in the room, the reason we introduce them is so that you can engage with them in between the session and post the session. Again, I said engagement is important to us. Having said that, I think I'd like now to welcome Abdi Mohammed, our CEO, to kick off the presentations for the day. Please put your hands together for Abdi. Thanks.
Good morning, everyone. Our dear investors, partners, members of the media, my colleagues who are here with us this morning, all the members of staff and other partners who are joined online, good morning once again. Hamjambo. I know it's a cold morning. People have just had breakfast. They're trying to get into the rhythm of things, but good morning. That's much better. Well, thank you for joining us for this results announcement. It's that ceremony that we do about twice a year, and this is to share with you the results for the first half of 2025. A few days ago on Friday, we had the launch of our sustainability report. And in that event, we spoke about quite a bit of the work that Absa is doing with the communities, and we'll cover some of that in our report today as well. But the main focus really for today is the fight. The way we go today, I'll cover the high-level strategic execution update, give you a bit of a sense around the operating context in which we are running the business. Yusuf will then come and share the numbers. I know that's what everybody is waiting for. And thereafter, I'll come and wind up, talk a bit about the dividend, and we'll then take questions from the audience. And that's where my colleagues who are introduced earlier come into the picture as well. But let me start with the overview of the operating environment. I think there are few key highlights to lift out of that picture. The first one is GDP growth in Kenya. Into 26, which is quite positive, really, when you think about the challenges that we have seen in the global economy. The key drivers for that performance includes agriculture and agribusiness. That whole sector has done quite well. And we are seeing that ecosystem around agriculture. I think it's the third or fourth year running that we have seen good growth coming out of that, that space. We also see growth in construction, infrastructure that is starting to pick up as well. The telecom industry, data, voice, fintech, and some of the innovations around that space driving economic growth. And services, the CBR rate in the market, and that has translated, as you will see later in the presentation, to more affordable credit generally in the market, and is expected to drive customers continues to grow as well. Now, we have ensured that we are passing and transmitting the benefit of the CBR policy agenda. We focused on businesses in the country. As happens sometimes in the cycle, there are customers that require support to restructure their debt, to allow their business to grow back, from position of stress and difficulty. And you will see that total number for the first half of the year is 1.3, as well as access customers in the rest of the world. I will not go into a lot of detail on this page. This must be a very familiar only from retail and business banking in the first half of this year. This growth is driven by where from a standing start less than 2 years ago, we've gotten. And lastly, on the consumer bank is really the digital acquisition of new customers that has started to grow as well. In business banking, I gave some examples earlier about what we are doing with women-led businesses, the business club. We were in this very room, I think, a few weeks ago with Elizabeth, launching a new card product for the Islamic banking sector. And that's another area of focus where we are seeing significant growth in Nairobi, in Mombasa, and other areas where we are targeting a very specific set of customers in that regard. We've also spoken about capacity building, training, and what we are doing for small businesses, which are really a big driver of Kenya's economy to ensure that they continue to grow. Briefly, on the corporate banking side, we continue to grow market share. We have over 40 billion of assets in our new custody business. You may recall that we launched the custody business in Q1 of 2025, and we already are getting to about 40 billion assets under management there. And it's a business for which Absa has core capabilities. We've done it before. We do it in other parts of the group, and therefore we expect that this number will continue to grow going forward. We also have significant interest both in corporate as well as business banking and retail in the mortgage market. It's an area of great expertise for us and great capability. We've sponsored some key flagship events in that space, and we continue to lead opinion. We continue to see growth in that sector as well. In global markets, as I said, the big headline there is that FX rates have been stable and have stayed stable over a period of time. And therefore, the team has focused, number one, on ensuring that we are improving overall and total turnover, especially by providing FX solutions to not just the corporate clients, which has been our area of focus, but also looking at SMEs, personal customers, and so on. And we've seen significant, more than 10x growth in volumes coming from that retail perspective. We have partnered with the Nairobi Stock Exchange on a number of initiatives, and the latest one, which is I think the picture that we have there, was the dual listing of the world ETF on NSE, which has opened the Kenya market to over 23 markets out there, more than 1,000 company shares in different parts of the globe. And we were very, very pleased, and Stella here led that initiative for us. And we were really pleased to be the bank that co-launched that with the Nairobi Stock Exchange. Before that, we did the gold ETF, and there are a few other products coming up as well. We continue to see high double-digit growth in the securities business, which is also a new revenue stream that we are working on, and risk management products as well. And so while the total revenues in the more time on it, only to say that they continue to grow both in terms of contribution, but also in terms of market ranking. Talk about the asset management under Moses. That is already number in the market that is very, very competitive and has overtaken additional players in that. We see a lot of interest from our customers in that asset management business, mainly because of attractive returns, but also because of the linkage that it provides into the wider Absa Bank as well. We track the share or the contribution of these new revenue streams to the total bank, and you see that that percentage contribution continues to increase as we move along. And remember, the total bank is not standing still. The total revenue is also growing and therefore that growth number is quite significant. Let me then move to the next item, which is around the digital space, where we've done continued investment as we've done over the last few years. And really what I would like to share here is some of the work that we are doing on payments and payment volumes, which are starting to go up. We've seen, through partnerships with the remittance organizations out there in the US, in Europe, and other parts of the world, a significant increase in the number of inward payments that we process. And the share of that market for Absa has grown to 6% in the first year of implementation. So it's an area that we continue to work on. And Julius has been helping us to ensure that that enabler is really driving the organization forward. I mentioned that on Friday last week we had the sustainability report launch. One of the items we spoke about is the Absa Foundation, and using that foundation as a vehicle to drive Absa's initiatives as we continue to support the communities in which we work. We've shared the key pillars, I will not repeat them, that we are focusing on there, including entrepreneurship, education, among others. And this is an area on which we measure ourselves, on which we have been accountable to the market, and on which we continue to report. In there, of course, we have the sustainability initiatives that we do to drive small businesses and support them as they grow. Now, one of the key enablers that we continue to focus on is the brand. And we measure how the brand is doing in the market, how it is viewed, not just by our customers, but the wider stakeholder base in the country. And I'm sharing some numbers there. Generally positive tonality in all the news and coverage of Absa, which is quite good, upper 90s. Significant reach through all our channels, including social media. And we continue to drive our reputation as the most trusted financial brand. And the latest one being by GlobeScan, as shown there. And significant levels of brand across the country. And for a brand that is just about 5 years now since we transitioned from the previous brand that we used, we feel quite good about the brand journey that we've been on. And lastly, in terms of the enablers, really is what we are doing around our people, our teams, and how we rank, not just internally, but also through external awards, such as the Top Employer Award, which, as shown there, we have won for the 4th year running. We're sharing some data there on our diversity figures, gender, both at a top leadership level, which is getting into almost the 50-50 percentage, but also at a total bank level, where we have a slight female majority, something that we are really, really proud of. Of course, there is a lot more to be done here. There are areas within the organization, in the technical spaces and so on, where we can do better. The top executive team, I think we are 45, 50, 55, and that's another area that we need to continue working on. But we believe we are market leading in this area of gender diversity. Another area we focused on more recently and has been a key agenda for us is really people with disability and ensuring that we are hiring, we are training, and we are helping them grow as well. We recruited a number of them, I think, quite recently, and they are undergoing training in the bank. And we continue to look at roles where we can proactively hire people with disability. And this is something we are really, really proud of as well. So the people agenda continues to be central to the strategy of the organization. Let me now summarize before I call in Yusuf. I think one key headline is the transmission of the central bank's policy and ensuring that our customers, continue to enjoy that benefit. This is good for the economy through increased lending to private sector. It's good for the banks because we do more volume. We get less impairment and provision numbers. And you will see through Yusuf's presentation that some of that is already starting to improve. And therefore, this is one area that we need to share as a headline. The second area is growth. It remains our focus to ensure that we are growing the organization. And you will see some of the numbers coming through and our guidance for the second half of the year as well. Innovation and digital is another area that we continue to focus on, and significant investments are being deployed, not just here in country, but across the Absa group to ensure that we are driving that agenda. We also, as I said just now, are focusing on our colleagues, investing in talent, attracting the best people from the market, ensuring we keep them, ensuring we develop them as an organization. And lastly, really, is the community in which we do business, how we partner with them, how we drive that sustainability agenda in a way that works for the communities in which we do business. And that's another area we are really, really proud of. So thank you very much. I'll pause there with the overview. And I'll now ask my friend Yusuf Omari, our finance director, to come and share the actual numbers for H1, and we'll come back and conclude later. Yusuf, over to you.
I always wonder, either myself or my boss, who is taller. If Moses was here, I'll be struggling. I'll be raising this one. Ladies and gentlemen, good morning. Really happy to be here with yourselves. And really a chilly morning. Some parts of the world where I went on holiday was extremely hot, so I'm trying to get used to this cold. Just picking up from where my boss concluded on this one, and more so looking at the macros, we saw a very sharp drop in rates. That really happened in towards the end of Q4 last year. We saw the T-bill, for example, the 6 months T-bill coming down from as high of 17% to around 8.5%. And this was a really, really sharp drop happening within a short time. And especially on the side of deposits, if they are term deposits, then you do investments which are contractual. So even when those rates come down on the side of deposits, we are still paying those high rates. But then, especially with the Absa base rate, which Abdi covered, we kept on repricing based on when the rates were going down. We've also seen on the slides, just as a precursor before I start my presentation, the FX stability actually for over now 1 year it ranges around 129. So those different, margins that banks in the industry were enjoying 1 year ago, you've seen even from Q1 results that the margin has basically come down. But at the end of the day, it's all to do with the customers. All this benefit has been delivered to the customers. And if you look at it from an affordability perspective, those rates have come down significantly. We've also seen, of course, the FX availability. There's a time we were struggling to get dollars to our customers, and that, of course, now has significantly changed. And then the last one, which you will see a lot of management response to this, is the drop in the cost of funds and, of course, the structure of our deposits. But just to start then on the balance sheet and be able to appreciate this, you see customer deposits picking up year on year by about 2%. But what's important there and really fundamental to what I've mentioned earlier on, we've brought the cost of funds down in line with what we have seen in the interest rate environment. And in there, you see that our focus is mainly on transactional deposits. So the proportion of transactional deposits, you see that going up 7% to 63% in this half compared to the previous half. And in there, that 2%, I'll comfortably tell you, it is more to do with a drop in TDs. But from a transactional perspective, that has actually picked up just to be able to make sure that we're able to cushion the impact that I'll share with you shortly on the lending side. Abdi covered some of the new investments we've done, new business asset management. You will see in there, which is what Abdi covered, 2 times jump in assets under management to about 30.4 billion. And this is really providing our customers with avenues for them to be able to go for high yielding assets, which is a one-stop shop for us, where we can be able to do investments in, from a perspective of, TDs, but then giving our customers avenues when they want to look at other high-yielding investments, and that's what is evident there. On the right-hand side, we look at the lending. This has come down 4% year on year. You see that going down to about 305 billion shillings. And you see the split between our corporate and our consumer and business banking. Corporate side, 1% up. It is expected in this kind of environment. Corporates will always continue to, go for these facilities. But we've seen a lot of preference, not just on the corporate side, but also on the side of consumer for short-term facilities. We've seen preference for overdrafts, trade facilities, specifically for consumer payroll loans, and our Timiza product also doing well in this environment, which is just telling you it's a transition, sharp drop in rates, issues especially to do with the household sectors, issues to do with affordability when you look at disposable income impacting the customers. But we're expecting this in the second half to be able to pick up. The hardest hit from a product perspective is scheme lending. But again, to what I've mentioned, in the second half, as we see, salary revisions, we should be able to see this picking up. I think just one more comment on this one. With the stability in FX, remember I mentioned the 129 that we've experienced, now for over 1 year. We are now starting to see also customers, especially on the wholesale side, having a preference for foreign currency facilities. And so the makeup here, you'll see that has actually picked up. About nearly 30% of our book now is in foreign currency, and that's because of the stability that we're seeing on the side of FX. While we see a drop of 4% in lending, you see total asset that has basically picked up 10% to 532 billion shillings. And in there, the number that you don't have is really the increase in investments in government securities, both on the side of trading and also on available for sale. That has picked up by about 70%, and that really makes up for the difference that you're seeing in terms of just the growth in total asset perspective. And this tells you a challenge we had 18 months ago. The growth in private sector lending, which Abdi shared, was about 14%. January last year was about 14%. This year in the sector industry, private sector lending is around 2%. So the excess funding is being invested in government securities, but then we are hoping as the economy is picking up with salary increments on the side of household, we should now then be able to see lending going to the private sector in this second half. Moving to revenue, you see for this half revenue coming down 1%. And in the makeup there, you see net interest income, a drop year on year of about 3%. And if I was to open it up, interest income alone is a drop of 8%. But for us to be able to cushion, because we are dropping on the lending side, we've seen the interest on government securities also coming down. To cushion that to what we've seen on the balance sheet on deposits, interest expense has come down by about 21%. So much a bigger drop relative to the side of interest income, and that informs the 3% you're seeing in terms of drop in net interest income. On the non-funded income, you see a 3% uptick. In here, we have FX year-on-year drop of 14%. In the industry, that drop has actually been much significant than what we are showing for financials, which is 14%. Excluding that impact, NFI would have picked up year-on-year by about 15%. The key lines here, the new revenue streams that Abdi shared, we've seen, for example, the likes of our asset management business, we mentioned, that picking up significantly. Our securities business has picked up very well, double-digit growth rates. Revenues from bank assurance has also picked up significantly. So the investments that we've done in the past really coming and rallying up and building, putting a cushion on the drop that we've seen coming as a result mainly of the drop in interest rates, the one that came in Q4. Bond income, strategically doing investments in our trading book that has also, if you look at it from an NFI, has also supported these financials. And then lastly, to the preference we are seeing with our customers around this time, not going for long-term lending. We've seen, card business picking up, preference to be able to use in a similar way for short-term facilities, a preference that is really coming from our customers. In terms of just the makeup of our financials, this revenue, and to what Abdi mentioned, you see the consumer business picking up relative to what we had last year. That proportion last year was around 46%. And you can see in this period picking up 50% and really showing a well-diversified business, both on the side, if you don't look at it from a wholesale perspective and a consumer perspective, really getting that right balance of 50-50, which really cushions the business depending on which, sectors or segments get impacted as we see changes in the macroeconomic environment. Moving to our cost numbers for this period. Our cost up 1%, way below inflation. But in there, you see we continue doing investments on our core assets, which is our staff. In here, of course, the investments we've hired colleagues, especially for front office, customer facing, side of our businesses. We've done investments, of course, issues to do with salary increments that we'll be able to explain on that increment of staff cost. On other operating expenses, you see that coming down. And here we are now getting a benefit. All the investments, especially from a technological perspective that we've been able to do, that now is coming to fruition. And through that, then we are seeing that cost coming down. We are seeing, even from a headcount perspective, that rebalancing that I've mentioned, the back office FT numbers coming down because of investments. And through that also, renegotiation of contracts, basically been able to deliver that drop in other operating expenses. Overall, a good story. It's evident when you look at our cost-to-income ratio, that continues coming down. For this reporting period, you see that at 36.4. And all of this is coming because of investment that we've been able to do over the years. Of course, revenue is the other ratio that informs that cost-to-income ratio. But really, on the efficiency side, robotic process automation, automation of the customer journeys coming to fruition, looking at the alternate channels that we've been able to give our customers. 94% of all our transactions right now going through alternate channels and not through the normal traditional brick and mortar branches. And then, of course, the investment that I've said and rebalancing of our structures between front office and back office showing in this ratio coming down over the years. Investments continue. Digitization level, you see there at 71%. And then in terms of just looking at the technological investments, especially on the side of digital, core banking, that continues to be our core agenda. And you can see in this period, 4 billion planned investments in this year compared to the 3.3 billion we did back in 2024. Then moving then to just appreciating from a risk management perspective, the portfolio quality. You see impairment coming down 38% year on year. In there, of course, with the drop in our lending book by 4%, we are getting a benefit there. We have focused recoveries, especially on the side of corporate and BB perspective. FX benefit comes in, that stability for foreignly denominated facility. You see a benefit coming there. And then the general portfolio quality, stage one, we're seeing a lot of repayments coming through in this period. And you can be able to see that has really brought down our loan loss ratio from 3.3% 1 year ago to about the 2.1% for this reporting period. Gross NPL, that has picked up slightly to 13%, but still way below what we are seeing in the industry. Industry at 17.6%. And really, the key driver there is the denominator. The denominator, which is a gross loans, which has come down 4%, is really what is having a bigger impact to that ratio, rather than just issues to do with the worsening of our book. Coverage ratio for this period has picked up, which gives confidence to investors in terms of us making the right provisions to just make sure that then we are accounting for risk that is in these financials. And then lastly, just to bring it all of it together, 1% drop in revenue, 1% up in costs, 38% drop in the impairment numbers, and in there then you can be able to see for this reporting period, profit after tax up 9%. That, of course, is informed with the rates that we've seen. That drop in rates, sharp drop in interest rates have impacted the revenue. We have been able to cushion that by bringing down the cost of funds. Over this period, we share the drop in interest expense. Of course, driving efficiency, productivity measures with only costs going up 1%. And then, of course, in this period, focus on recoveries and making the right decisions. You can be able to see impairment coming down 38%, which then basically informs the 9% growth in profit after tax for this half. Key ratios, we've shared some key ratios in the next slide. We've covered majority of this. The loan to deposit ratio, you've seen that coming down 84% because of a drop in lending. A lot of liquidity, which you can be able to see liquidity ratios have picked up in this period. And we're hoping we can then be able to extend a bigger component of this balance sheet to private sector lending, with the expectation that we said that should be coming in the second half, that should be able to then ramp up the lending side. Return on equity at 26.5. That is above our cost of equity. Cost of equity for us is around 18%. So a good return from an investor perspective. We've shared some key ratios. The next slide. You see core capital ratio, the total capital ratio, significant buffers, significantly above the regulatory limits. And the ratio that I've mentioned, because of the investments in government security, you see then our liquidity ratios have picked up to 45.5% in this reporting period. But generally, you would say sufficient buffer that then puts us at a pole position, especially when we look at now in the second half, for us to be able to support our customers and their respective businesses. Finally, is really from a guidance perspective, what should we be looking at? And this one really, I'm not looking at it on a quarterly basis, but really on from a medium-term perspective, sustainable balance sheet growth. You've seen the change in our structure. You've seen the change in our deposit, more focus on transactional deposits over this period. That will continue. We hoping that, the lending, and this one I'm looking at it from a perspective of the entire industry. The 2% lending to private sector, we're hoping this now can start picking up in the second half. So that becomes a focus area. Issues to do with diversification, the revenue streams, the new businesses that we've spoken to becomes a focus area. Efficiency, low, cost to income ratio, that continues to be a focus area for us. From a shareholder return, target as a minimum 5% above the cost of equity. That we've been able to deliver significantly higher in this half, but that becomes, again, from looking at it from a medium target perspective. And then really to make sure that from a balance sheet perspective, we're able to maintain our NPL ratios to levels that are significantly below what we are basically seeing in the industry. So I think, ladies and gentlemen, if you look at these financials, really informed from a perspective of a sharp drop in interest rates. We've not seen the private sector lending picking up at the same pace. It's now becoming affordable, significantly affordable for customers to be able to borrow. But then because of that sharp drop, you'd rarely see a drop of 800 basis points within a period of like 3 months. And so we are hoping that customers will now be able to embrace and be able to get to go for loans and advances. That becomes a focus for us. And at the end of the day, from an investor perspective, promise that our focus will still remain from a perspective of returns, which is why we've put targets to make sure that our cost to income, we are above 5% cost of equity as a minimum when we're looking at our returns. So let me pause here and invite my boss back on the stage. Thank you. Thank you so much.
Thank you, Yusuf. A big round of applause for Yusuf. I think the main job of the day is done. We have the Q&A session and the discussion later. But let me quickly do a 1-minute recap and also make a comment on the dividend. I think in terms of the summary, Yusuf really did a great job of it. I won't repeat, the numbers are there. Flattish kind of revenue based on where we are coming from and that rate environment that we discussed. 9% growth in profitability, driven by number one, management of cost of funds, and it was done quite proactively starting from earlier in the year. Management of cost and just efficiency, and I think you saw the CIR numbers, but also a great half on impairment, which Christine, our credit director, is here, and her team have done an excellent job in both from a policy perspective and ensuring that the quality of origination is good, but also in terms of supporting customers when there is a distress. I think on the customer assets, it's really been in line with the wider growth in private sector credit. But as we said, based on the positive actions from the MPC, the numbers we've seen coming down on the CBR, and the levels of transmission that we've seen in the industry, we expect that the client assets will pick up. And as they do, you would have seen that Absa Kenya is very well positioned from a liquidity perspective, loan to deposit ratio perspective, our government security holdings, which is a transferable asset. So we have the capacity to grow the asset book in the second half of the year. Cost to income ratio continues to be good, and this is largely because of the digital agenda and the fact that we are starting to see significant percentages of our customers going into self-serving channels, and therefore that will continue to drop as we move along. This doesn't mean that we are not investing. As you saw in Yusuf's detailed numbers, the levels of investment in technology and other areas continues as well. And lastly, really a good return on equity at 26.5%. On the right-hand side, we've shared some of the core priorities. I think I covered them all earlier. And just to reconfirm that as a team, we remain committed to good execution of the strategy as agreed with our shareholders. In fact, this week, my team and I are once again out on a strategy session, planning for 2026 and ensuring that we continue to remain on this path. Lastly, let me go to a famous slide. Because it's at the time when we announce the total number. But really, this is an interim results announcement. And therefore, as we've done in the last few years, we announce an interim dividend as approved by the board of 0.2 shillings per ordinary share. And this will be paid in the middle of October, as shown there on the dates. In terms of total dividend, you will see the trend that we've shown there starting from 2021. We've continued to offer double-digit growth in the dividend number, and therefore that should hopefully be a good indicator for shareholders with regards to the history and where we are coming from and the trend that we have been able to show. Our policy remains and continues to remain a good balance between dividend payout, ensuring that we remain competitive in that regard, but ensuring also that we have enough investable assets as we move forward. So, ladies and gentlemen, I'll stop there. We'll now go to the next phase of the conversation. But let me invite Charles back here to guide us through that. I would like to thank you very much for your attention, and I'm looking forward to the next part.